Hi guys, this is Manni Chopra at the Titans Coffee Morning, and I've got none other than Rob Quinn here, who's very kindly come in to talk about HMO funding. Thank you, Rob, for coming.
Very nice to be here as always.
So Rob's from HGC Finance and he's one of our sponsors at the Titans events. Today Rob talked about HMO funding. So Rob, do you want to tell us in a nutshell what's going on in the current market space with HMO products?
Well, HMOs is still a very hot area of the market and investors. There's a few nuances to them in terms of which sizes you want to get to, whether in certain Article 4 areas or not, whether you're going to try and do that under committed development, whether you're going to go straight to planning, how are you going to fund it? You're going to use private money, if you're going to use short-term finance, what investment valuation you may be able to be applicable. That makes an enormous difference in terms of how much leverage you can use and how much money you can potentially get back out of the deal. That will have a few different factors, and there's definitely, if you go down that path, some lenders are far more amenable to those terms than others.
So key thing here is, so let's say someone who's starting out and wants to do their first HMO, what sort of product would they go for? Would they go for a straight away a HMO mortgage?
No, well, classically, the most common case is someone would find a certain area where there's demand, whether it's most probably not in Article 4. Classically, a terraced house or mid-terraced house. You would then try and commit a development, we buy on a bridge, and there'll be an element of what is that build cost going to be towards that, and we'll fund all of your build costs, and maybe 2/3 to 3/4 of that initial purchase price, and then we'll rest that on what that TDP will be at the back end. When you get to that end, you may then have different options applicable to yourself. Are you happy with that 5 to 6 bedroom HMO and the yield it generates, or is there potential to apply for additional planning and to maybe maximise that asset as much as possible? At that point, you would turn around on that decision whether you want to refinance that 5-year money, perhaps, or whether we want to try and increase our short-term finance and really maximise the asset available to us. So there's different paths at every junction.
Key thing is, guys, if you're looking for your first one, definitely, as Rob said, go non-Article 4, go for permitted development, so up to 6 rooms is PD. And I think some people don't even put an application in, but maybe speak to your architect and planning consultant and find out if you actually have to, if you aren't doing any external changes, i.e. extensions, dormers, whatever, you may just go straight into the 6 bed without actually having to put any applications, albeit you will get the right advice from your planning consultant, maybe to certificate of lawful use once you've done the conversion, all of that.
All of that. And classically, for people wanting to grow their portfolio quicker and are very ambitious, then that is the most common path to go down.
Okay, so what sort of rates you're looking at? What's the appetite in the market? How are you finding it? Obviously, we're still waiting for that rate.
If you were doing the path of highest return, you could potentially borrow up to 80% net on that purchase price at maybe 0.8, 0.85. That would roll up. Obviously, then you've got relatively turnkey projects. So these projects aren't as long as bigger development projects. So you may well get that done in
9 months.
9 months, but and give it a little bit of time to kind of refinance out. Then when you come out the back of that, you're probably looking now around about 5%. On the HMO, yeah, with a percentage point fee, whether it's 3 or 4.
Or 3 or 4%.
Yeah. And potentially where we are now, going forward, by the time you're coming out the back of that in 6 to 9 months, you're probably looking at a much better rate environment then.
Yeah. Okay, well, interesting. So there are options, appetite still there.
Oh, very much so.
And what are you anticipating on a slightly different topic? And what are you anticipating now that the elections have been announced? Has there been any change at all in the last couple of days since this whole sort of roadmap to election year on July?
Yeah, to be honest, I don't really see much in it. Really, the bigger thing is the Bank of England is independent. The Bank of England has its own pressure on it, and so they've got their own critics to answer to. I think the Bank of England is coming off potentially, hopefully, at the next meeting, and that slide will continue.
You reckon?
Oh yeah, I don't see why not. You can't really justify having a 5.25% yield interest rate when inflation is just above
2.4% now.
Growth is just one and a bit. So you can't really justify from a Bank of England point of view. So, is there going to be much difference? There's so much overlap between what Conservatives and Labour represent anyway.
I mean, they're banging on about services inflation and wage inflation and all that. Do you think that might stop them?
That's a 24-month kind of story, really. That's going to unwind it. And remember, when the big inflation drive in recent years, there were 3 pillars to it. 2 of those pillars have now gone.
Which is?
Well, you had the building material, you had COVID, supply shock.
Yeah.
So that's gone. You had the energy shock. That's gone. And as I've mentioned before in your channel, you're much more sensitive to a gas shock than you are from an oil shock. So if you separate geopolitical risks, and the third one is largely kind of the inflation, is the wage round. The wage round, they've stayed relatively high, but they're getting close now to mid-single digits when they were high single digits. So I think it's that final leg. So I don't see any impediment to the Bank of England relaxing rates going forward from here.
I think 20th of June, I think they're saying, is the next
The
meeting.
next MPC in the
That's
next
all?
6 weeks. Yeah, I think so. I think things are positive.
Amazing. So on that positive note, we'll end it there. Thank you so much for your time and thank you for watching.